Hi everyone, welcome back to the GNS podcast. My name is Julia Minier and I'm here with AJ Singh, our CPA.
Hi everybody.
Today we're breaking down what happens when you get an EDD audit letter in the mail, what the ABC test really means, and what this means for you as a business owner. All right, AJ. So in simple wording, what does the EDD do and what does it mean when I get an audit in the mail?
Well, I'll try and be as simple as possible. The EDD audit letter should be taken very seriously. You're looking at a potential liability, and oftentimes there's a trigger that starts the audit. So either you've filed a lot of 1099s and it raises the alarm on their algorithms within the systems and they send that notification, or somebody might have filed a claim on your account, a disgruntled employee that believes they were wrongfully terminated and now they're going to file a claim. When they get to the EDD, they see that there are no UI wages being paid. You don't have this particular person on payroll, and that's when they start auditing all your hiring relationships.
One question we get asked a lot is, are EDD audits random?
I have not seen random EDD audits. No, there's normally a trigger, and it's one of those two. Either there's a claim filed by a person that you hired that you classified incorrectly as an independent contractor, or you just have a huge volume of 1099s that you file, which is not normal.
Are there specific industries that are more likely to get EDD audited?
The industries that are normally coming to us are the logistics type industries. So trucking companies and courier services, those Uber and Lyft type companies, or maybe private companies, and they've hired a lot of people on 1099. And some of those are legitimate 1099ers. They're independent, in fact. So, we just need to prove that to the taxing authority.
So, in your experience, what is the highest assessment that you've seen so far?
Well, we've seen a lot of assessments, large ones. The most recent one, probably around 1.7 million.
Wow.
And so a big chunk of it is the personal income tax withholding. So then you have to go about proving to the EDD that those contractors have filed their tax returns, and we try and get that abated.
And so the real question is that number final, or can business owners bring that down?
It's not final. You have to really work at the number with the taxing authorities, provide them supporting documentation, and if it's your second time audit, then that becomes even more challenging.
Okay. And what's the lowest that you've been able to bring it down?
I think that we can bring it down to about a third. And then from there, what you're doing is you're trying to see what other exclusions, exemptions they qualify for. For example, we have a client that they have hubs in different states, and so all their direction and control isn't coming from California itself, it's coming from various other states. So we've got to prove that yes, people that are being controlled from California, but you also have those other outside contractors that are relying on those terminals for their direction, and therefore they shouldn't be falling into that California assessment. So we've got to put together all the substantiation, provide that to the EDD, and most likely we will get that liability even lower.
So, under California's AB5 law, every worker is presumed to be an employee, and the burden is not entirely on you, the business owner, to prove that they're not. So you have to satisfy all three prongs of the ABC test. Prong A of the ABC test is that the worker has to be free from your control and direction, both under the contract and in practice. Prong B is the worker has to perform work that's outside the usual course of your business. Prong C, the worker has to be customarily engaged in an independently established trade or business of the same nature as the work they're performing for you. If you fail any one of these three prongs, just one, the worker is an employee in the eyes of the EDD. So, AJ, question for you. Which prong trips up most business owners?
The independent contractor being in the same line of business as the hiring entity, that would be the biggest stickler, I think. It's common to see, these entities that are, for example, going back to a logistics company, they're hiring another logistics company, 1099ing them, treating them as independent contractors. That's totally against the AB5 rules. So, now let's take the example of a brokerage. A freight brokerage company is hiring a trucking company. That's okay, because a freight brokerage company won't be actually moving the loads around, the freight around. It's the trucking company. And so those are in two different fields of operation, and that's okay. And so structuring your business in that manner, I think that takes planning, and we help our clients with that.
And AB5 has been the law since January 2020. Why is it that we still see so many audits?
I think enforcement, although enforcement has really picked up in the last 1 year, and also the cost of moving your operations, restructuring, that is something that you really need to plan for, and it takes a couple of years. So the payroll taxes are an additional expense for the employer, but also I think the larger expense is going to be the workers' comp insurance. So then, planning for that takes time, and if somebody's moving from their insurance, they're adding workers' comp insurance, you could be looking at rates of 15-20% for every dollar that you pay in payroll. And so through planning, you could reduce that expense, but that takes time. So captive or self-insurance is a possibility if you qualify for it, but that's a big challenge to move them into that structure as well.
When a company does get audited, what is their best strategy?
The best strategy is to look for a professional that can guide them through the process, and because collecting the correct records, providing them to the auditor timely, and so that professional is now having direct communication, regular communication, supplying the information that's needed, so that the audit can be closed within a reasonable amount of time. And even if there's an assessment, having that professional follow up with an appeal, I think those are the key. That's the main strategy that they should follow. Doing it on your own, especially for those larger businesses, it's a nightmare.
All right.
And the cost of hiring somebody to take care of this potential liability, you'll definitely see the benefits.
And what's the general timeline? So if somebody gets audited, what timeline should they follow to ensure there's no extra penalties or to get it situated timely?
I think the audit could be completed within a couple of months. And from the start of the audit to eventually concluding the audit assessment through appeals could be a 6-month process. And so it's really important that you hire somebody that is experienced with EDD audits, and we've been doing them for the last 15 years.
Do you have any real case examples of audits that you've worked on personally?
Oh boy, a lot of examples. I mentioned previously that we're working on one audit. We've got the assessment down to like a third, and now we're trying to argue with the EDD that a lot of the contractors were out of California's jurisdiction. And we've got another case where potentially all the contractors that they are trying to get an assessment on are actually independent. They came to work when they wanted to. They were available to work for another company. They use their own equipment. So that one looks like something that should go in the client's favor.
So what exactly is the entrance interview then?
So that's the first interview with the auditor. They're asking basic questions about the business, and they're trying to find out who are the people that are making decisions, who are the operations managers, and they're trying to get an understanding of what these workers are actually doing for the company. And within this first interview, they look into whether the owners are doing enough payroll, and if they haven't done enough payroll, should they be paying themselves more based on what they actually do for the company. So there's a concept called reasonable compensation, which basically means that if somebody hired you to do the job that you're doing, how much would they pay you? And so you can go on to public sources and see what salaries are like, but then you have to make adjustments for that particular situation. So they're trying to figure that out, and they're trying to figure out the relationships between all the people that work within the entity. And so that first interview, it's really important to answer the questions in a way that would support your case. So through experience, I've really learned that there's always a reason behind their questioning, and so I need to be vigilant on how I answer them.
And this interview happens after you get audited?
This will happen before the audit starts. So this interview will happen before they actually start evaluating all the documents that we provide.
Does this also, what was it called?
Mm-hmm.
Reasonable compensation, when they determine reasonable compensation, that applies for both W-2 and 1099?
So reasonable compensation applies to the owner.
Oh.
Only the owner. And so, whatever they pay those other workers, it's, you're going to assume that was reasonable because every individual negotiates their salary at some level. But the owner, his compensation may not be, or it might be too much. So the benefits to the EDD is to have more wages within those base thresholds so they can collect the taxes. That's more revenue for the state. What many owners do is that they don't have any payroll, or they have very little payroll, so the state is not collecting enough taxes. EDD is only in California. Other states have their own taxing authorities, depending on what state it is.
So, I mean, theoretically, could a company just avoid an EDD audit by moving their company out of California?
Yes, they can. If they move the direction and control out of California, then that will work. And so, if they move the company out of California, you're only subject to potential liabilities on anything previous. And you got to be really careful, because if you still have, sales from this state, you still have payroll in this state, you have a business location, you have real estate of some form, leased or owned, you could still be potentially subject to EDD.
Okay. But still a little cheat code.
Yes, it is a little cheat code, yeah. But it has to be structured properly. And most likely, if clients come with that question to me, we would get an attorney involved. We have some very good employment tax law attorneys.
Other than coming to us, is there anything that our viewers should know about EDD audits?
Yes, trying to prevent them. So look at your hiring practices, and if you believe your employees are misclassified, you should definitely evaluate transitioning them over to W-2 employees, getting workers' comp insurance. And not only does workers' comp insurance actually protect you from employee lawsuits, but also from the EDD. So that plan definitely needs to be done. We can help you plan, make that transition, make it cost effective for you to transition, cost effective as possible. You can avoid all the hassles of potential EDD audits and lawsuits.
For any other specific questions or to book a consultation with us, you can find us at www.gns-cpas.com or send us a message to 909-217-7855. Thank you.